How does inflation affect real estate? Because inflation, like we've never seen in our adult lives, is here. And if you're not careful, it'll eat you up financially. But if you play your cards right, it can make you wealthy. And I'll show you what I mean. You ready? Let's go. Okay, so by the time we're done here, you're gonna know what inflation is, how it affects real estate, and further, how the rising interest rates come into play and collectively how it all affects real estate investors. Oh, and by the way, if you're still looking to get that first deal under your belt, I put together a free training just for you to help you get that first one done. And then I'll show you how to earn $5,000 a month flipping contracts and properties working as little as 1 hour a day. And you can access it for free at mattsfreetraining.com. All right, inflation. It's a tough topic to escape these days, meaning there's no shortage of talk and speculation about the forecast of our monetary system in the United States. One expert says that we're going to see high inflation, and the next says we could be headed toward a deflationary environment, and then yet another drops this big giant word that most of us have never heard of called stagflation. If we only had a crystal ball, that would be really helpful. But the daily decisions being made by the powers that be seem to be, defying logic these days. And that only makes it more difficult to predict what we can expect the monetary policy to be. So, for educated real estate investors, it's wise to understand how inflation impacts real estate and how really high inflation, like what we're experiencing at the moment, can affect your assets, your cash, and your debt. Most importantly, how do you protect yourself and the real estate wealth that you've built thus far? So to make sure that we're on the same page here when we're talking inflation, it's felt as a gradual increase in the price of goods and services in the marketplace. And I'm sure you're feeling it in many areas of your life right now, food and energy most prominently. What we're really experiencing though with these rising prices is that each unit of currency, our US dollar, is buying fewer products and fewer services. The layman sees inflation as making things more expensive. The more sophisticated person understands that just our money is losing its purchasing power. The inflation rate, the annualized percentage change in a general price index, is a typical metric of inflation. And inflation, it disrupts the economy's pricing systems. And this forces people, as well as firms, to make less than optimal spending, saving, and investment decisions. Furthermore, when there is inflation, economic players frequently take measures to shield themselves against its detrimental effects, diverting resources away from more productive activities. So in the end, inefficient decisions can diminish earnings, it can slow economic progress, and it can lower living standards. And these far-reaching distortions warrant that inflation is kept low to stabilize the economy and promote the productive utilization of resources. An inflation rate of just under 2% is considered to be healthy for an economy. Per the last reading, we're well above that, like 4 times above that. It's high, and everyone is talking about it. In fact, it could be the one thing that maybe brings this country together, meaning that both Democrats and Republicans are equally concerned about and for the same reasons. Inflation, it's an equal opportunity money destroyer, and it doesn't give 2 bits about your political affiliation. But that's a conversation for another time. What we want to know is, how does it affect real estate? So historically speaking, real estate has always been considered a strong hedge against inflation. For example, in 1979, when inflation reached 13.5%, the average dividend income from real estate investment trusts trading on the stock exchange that year, that was 21.2%. In 2011, when inflation reached 5.1%, that same year, annualized returns from those same types of REITs was 8.4%. So once again, real estate investments were a safeguard to investors' buying power. And that correlation can be shown time and time again in history with REITs, like I just mentioned, and very similar outcomes are recorded on private real estate ownership as well. It would be easy to compare real estate and inflation numbers from any given point in time and recognize that the appreciation from real estate alone is a hedge against inflation's money destruction powers. In fact, real estate tends to outpace inflation and keep real estate investors in the black when non-owners of real estate are customarily swimming in the red. But it gets even better for real estate investors. And if you like the sound of that and want to know more, let me know by smashing the like button. And if you really take your real estate investing seriously, make sure you click the subscribe button as I post stuff like this every week to help people like you become better real estate investors and retire early. A probable positive during times of high inflation for real estate investors is the appreciation of the real estate that they own. Also, rents from their income properties tend to rise during inflationary times as well. And here's why. During high inflationary times, it can be difficult to get a mortgage, as many are starting to experience right now. High cost mortgage rates mean buyers have less purchasing power, so many continue to rent instead of buy. This surge in rental demand results in increased rental rates, which is great if you're a landlord. However, it's not all rosy for real estate investors. Potential negatives in inflationary times is the increased costs of building materials for new homes. With these increased costs for building, new construction can be a very difficult investment when the economy is experiencing high inflation. Not to mention the increased costs of borrowing money. It adds to the difficulty of building new homes, and it adds to the difficulty of acquiring new investments as well. Banks don't want to get caught with their pants down during inflationary times, so they'll charge higher interest rates and offer fewer loans. But if you can access loans during inflationary times, it can be another check mark for the positive. And here's why. You see, when interest rates rise, mostly in periods of economic expansion, various asset classes react uniquely. Rising rates erode the principal of bonds, affect the value of stocks and other financial assets, and influence interest payments on debt. However, real estate investments have the characteristic of performing well in a rising rate environment. In particular, income-generating real property and multifamilies have historically shown a greater ability to grow net income during expansionary periods than securities and other assets. You see, mortgage payments on long-term fixed-rate instruments do not change over time. In other words, the payments remain constant while income and equity growth accelerates. Furthermore, inflation reduces the value of money owed in the future. That said, advisors and investors should be aware that as mortgage rates rise during periods of inflation, demand for real estate tends to decline as debt becomes more expensive. And that could result in weakening the demand for real estate and can negatively impact asset prices. But then, that only impacts a real estate investor if they need or want to sell. Due to the demographic shifts currently underway, specifically millennials maturing to the average age of the first-time home buyer, we're unlikely to see a substantial drop for real estate demand. We've got too many people, and they've got to live somewhere. Whether they buy or rent, that should translate to favorable conditions for real estate investors. So during inflationary times like this, the favorable investment strategy for real estate investors is to hold. By holding on to your investments, you place yourself on the winning side of inflation. 1, your rents rise. 2, your property's value rises with inflation. And 3, the debt on your asset is devalued. So if you sell your properties, you lose those benefits. And inflation all of a sudden becomes the same evil force eating up your cash's buying power like it's eating up everyone else's. So you have to earn more money in other ways. Unless you love working, it makes more sense to hold your real estate and let it do the work for you. With more positives than drawbacks, an inflationary environment can be very positive for real estate and real estate investors if they make smart acquisition and management decisions. If you'd like to explore the possibility of working together one-on-one to become a smart real estate investor, go to reiace.com, answer a few questions, and then just pick a time for us to hop on the phone and brainstorm some ideas about getting you in position to benefit from these inflationary times ahead. reiace.com. And I'll go ahead and I'll put that link below in the description for you too. That's it for now. Thanks for watching. Take care.